would now like to hand the conference over to Mr. Karl Kola from CDR India. Thank you, and over to you, sir.
Thank you, Janice. Good afternoon, everyone, and thank you for joining us on Balrampur Chini Mills Q4 and FY21 results conference call. Today we have with us Mr. Vivek Saraogi, Managing Director of Balrampur Chini Mills, and Mr. Pramod Patwari, Chief Financial Officer of the company. We would now like to begin the call with brief opening remarks from the management, following which we will have the forum open for discussion. Before we begin, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation which has been shared with you earlier. I would now like to invite Mr. Saraogi to make his opening remarks. Over to you.
Good afternoon, everyone, and thank you for joining us on Balrampur's Q4 and FY21 earnings call. I hope in these challenging times, all of you and your families are keeping safe and are in good health. I will initiate the call with an update on the current developments in the sugar sector. Post that, we can open the forum for Q&A. I will not go through all the detailed numbers because Pramod has put up a very comprehensive presentation, investor presentation, and I hope you would have had the time to go through it. As per ISMA's latest report, sugar mills have produced 30.57 million as on 31st May, and another 1.5 to 2 lakh tons in the special season could come. So you can take this year's production from 307.5 below 308, as compared to 27 million produced in the same period last year. In UP, mills produced 11 million ton against 12.5 million ton. In addition, a majority of good and Khansadi units had to cease their operations due to lockdown limitation, and part of this cane has been diverted to the mills, extending the crushing season in the western UP beyond the expected lines. In 31st May, Maharashtra produced a higher number of 10.6 million against 6.2 million, which was envisaged. During the same period, Karnataka produced on expected lines again 4.2 against 3.4 million. Coming to the global scenario, led by a lower output in Brazil, the global scenario is as follows: lower output in Brazil and Thailand would result in a global deficit. This has led to firm international prices, enabling India to export excess inventory. According to the estimates, India has exported 5.7 million tons in the current season, contracted. And Pramod, how much would have gone out?
Maybe around 4.5 million.
4.5 would physically leave India by May and thereafter subsequently. So just to complete this, we expect 5.7, 5.8 to go out of the 6 million. In the current year, beginning October to December, that is the sugar year, some 4.5 lakh tons was pending of last year, which is gone out. And we are expecting some quantity to go out in the OGL format, that is without the subsidy. So India could actually evacuate this year 6.7 to 6.8 million tons of sugar from its figure of opening stock. With India's production expected to reach around 3.8, post diversion of about 2 million tons into ethanol via BHA and juice route, and consumption of nearly 26 million, and export, as I said, of about 6.8 million, the way I've explained this now. We expect a closing inventory of about 8.8 million. And here also, actual inventory could be a little lower in our personal view. That is our company view. The data with ISMA and the government would be around these levels. Average sugar realizations have been around 33.5 from April onwards. The industry has urged the government to hike the MSP in order to clear the farmer dues. The request is still pending for final approval. Also, keeping in view the firm global prices, the government has reduced financial assistance on exports, that is in a prospective manner, by 2,000 rupees. That is 6 rupees per kg has gone to 4 rupees. From the applicable date for this is post contracts executed after 20th May. After 20th May. A significant portion of allotted quota has already been contracted. We don't foresee any problem in evacuating the quantity. And obviously, we don't see a problem because we see additional quantity going out via the OGL format. Here, I'd like to add that reduction in financial export, assistance export is not applicable to the company as our entire quantity was done way earlier. So we are eligible, and others also who have done their contract before 20th May are eligible for the entire 6 rupees subsidy on the amounts contracted. On the ethanol front, OMCs have contracted out 321 crores of ethanol from mills across the country. This is a 70% increase over previous year, 178 crores. Overall, 2 million tons of sugar production is expected to be diverted to ethanol via cane juice and BAV, as I mentioned earlier. Out of a total contracted quantity of ethanol, 225 crore liters is from cane juice and BAV route, which is the sugar sacrifice route, nearly representing 70% of the total contracted quantity. So, out of the total contracted quantity, 70% is going via the sugar sacrifice route. On an average, the country has blended around 7.56%, with 11 states achieving up to 10%. We are on course to meet our target of 10% blending countrywide by 2022 against the current year's blending, which could hopefully be in the region of 8.5. It might be a little lower for Okay. Now I hand over the floor to Pramod.
Good afternoon, everyone. As we mentioned, that results and detailed presentations are already shared with you, and we hope that you had an opportunity to glance through the same. We would request the moderator to open the forum for questions or suggestions that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prateek Agarwal from ASK Investment. Please go ahead.
I was interested to understand the ethanol business. Now, it seems to be significantly more profitable than sugar at current prices. Does it mean that, if you do not have capacity constraints, then you would first do as much ethanol, practically all the cane would be used for ethanol, and only if sugar prices settle at a higher level, which makes sugar as profitable as ethanol, will you do sugar? And an associated question then is, why should you not expand ethanol capacity as much as possible?
Okay. Right. We'll attempt to answer that. So let me explain to you. Our Mirzapur distillery is an effort in that direction to maximize ethanol production. And we are also continuously now working on our ability to enhance ethanol further. So there are internal studies, etc. going on. And once we get clarity, we will be approaching the board. So yes, to answer your question specifically, there is a limited ability to put up distillation capacity. There are a lot of issues on pollution sizes, etc. We would put our best foot forward and maximize ethanol production in the coming years.
Understood. Just an add-on to this, as I understand today, there is a command area from which a sugar mill can source sugar cane. Now, there may be a possible scenario wherein, you have both capacities and on a marginal basis, it may be profitable to do both sugar and ethanol. And then, can you go outside of your command area to get sugarcane, because that may prove to be a constraint at some point in time, hypothetically speaking.
Okay, so let me answer what we are looking at in the coming years. So last year we were hit by a very bad weather condition, and our crushing dropped about 17% of them. We are hoping a lot of it could be recovered back. Means, let me not put figures, but one is hopeful of quite a big recovery in the quantity. We are working very, very, very hard on answering and sort of building our checks and balances, whatever we can see. Extreme weather, nobody can beat. But outside of that, we are going ahead with varieties based on plot-wise varieties, which are more prone to, let's say, disease or more prone to floods. We are getting resistant varieties. So we are hoping to increase gains substantially in our command area with a lot of micro activities and with the farmer directly. So we are reaching down to the farmer, and we are hoping that in the next 2 to 3 years, we will see a substantial growth in cane availability with further improvement in variety. And therefore, we look to get back and get to a very decent quantity of cane crushing with a very decent recovery. Both would be definitely higher than our current levels. So we can work and we'll get more cane that we can share very confidently, as we have done very detailed research studies on this now. Secondly, our ability to do the flexi business, as you are indicating, will also improve the moment we are able to share a roadmap after we internally study and get back to everyone via the board.
Yeah, okay. Understood. Thank you.
Thank you. The next question is from the line of Sanjay Manyal from ICICI Direct. Please go ahead.
Hi, sir. Have a few questions. Specifically, what would be now our dependency on the variety CO0238? And is it like excessive use of the variety across state? This red rot issue has occurred, or is it because of this specific variety, or so what would be the dependence on this, and how you would be in terms of proportion, how you will change it in future?
Very good question. So 238 has become prone to red rot, yes. In certain areas again, yes. So we are shifting our dependence to other high sucrose varieties like 118, and we are in the stage of developing some very high yielding varieties where hopefully we might get prime mover's advantage, first mover. I won't name the variety, but we are working on, sort of commercial launch of that variety by 22-23 in our factory. And our dependence on 0238 will keep declining. So 118 has already picked up in a big way. The other variety would pick up by 22-23. Having said that, now since you want to do such a detailed question, I will answer. We are taking plot-wise detail of how to not let red rot impact us. So the plot in which 238 was sown, that plot is very largely being abandoned by the farmer. He is going to an alternate plot of his and putting up a different variety in that plot. So that will again very substantially answer create our safety. Plus, we are going ahead with, if some farmer does not listen any of you, which might be a small percentage, we are working with him very hard on all the factors and all the sort of agri inputs which can be used to ensure that the disease impact is very minuscule.
Right. And this trend is changing across state. In the sense, all the farmers across state, farmers want to reduce the dependency on this thing, or all the millers, I would say.
See, I won't be able to answer all over, but yes, definitely people who are seeing this problem would be attending to it. We won't have a very detailed rundown on this for the entire state.
Right, sir. Right, sir. So just one more thing on the global perspective. So what I understand is prices reach 18, 19 cents LP, then first beneficiary obviously would be the government because they will be sort of reducing the subsidy part. But at what price you think that UP millers specifically would be exporting under OGL or without subsidy?
Well, Pramod will take the question.
We have indicated this prime point in our presentation as well. At current raw sugar prices of around 17 cents, I think for UP-based millers, raw sugar net sugar realization is around 26.
Sir, I'm so sorry to interrupt, but may I please request you to speak a bit louder? Your audio is not clearly audible.
Yeah. So at current international prices of around 17 cents, for UP-based mill, raw sugar prices realization expected will come at around 26.5. So if you are asking for that, what prices UP sugar mills would be in a position to export without any subsidy element, I would put that figure anything between 19 to 20 cents.
Right, sir. And just one operational question. I think what you got the quota for the quarter, means the domestic quota for the quarter was 2.1. If I'm not wrong, can please correct me if I'm wrong. But I think you sold less than that. So is there any specific reason for that?
Yeah, there was some problem in the month of January and February, particularly January, and maybe a bit of December also. So during that period, we could sold lower than our quota.
And this was a conscious decision, which is sort of, because we didn't want to break the price beyond a certain level. And typically this happens in December, January, February part, when all the millers who are selling beyond their quota, etc., flood the market. So when we refused to sell the price of 31.5, having borrowed at 4%, below 4% for an entire cash credit in the CP format, we are going to get hopefully above 33.5 for that sugar not sold.
Right, sir. Right. Thank you very much, sir. Thank you very much.
Thank you. Before we take the next question, a reminder to the participants, please limit your question to 2 per participants only. You may rejoin the question queue if you have a follow-up, as we have people waiting for the turn. The next question is from the line of Pratik Tolia from Elara Capital. Please go ahead.
Thank you so much for the opportunity. So just one clarification. Your voice was a little disturbed at that time. I could not get the export number that you've given for the industry for this year. Did you say total exports will be around 6.8 million tons?
Yes. I'm talking 1st October 2020 to 30th September 2021.
Right.
6.8 million. Yes.
So any reason for such a lower export, considering that you also spoke about Brazil being lower, so at least 3-4 million ton additional opportunity is available for the Indian millers. So is it only on the pricing front, which Pramod just alluded to, that at 19-20 maybe we can go for the OGL? Otherwise, the exports will be muted at around only 0.8 million tons additional over and above 6 million tons.
This is the largest ever export, my friend. 6.8 million, 68 lakh tons. India has never done close to this.
But the opportunity was also never available. 3-4 million tons, lower production from Brazil has opened up a big window for us to liquidate the 9 million ton of excess inventory which we are sitting on.
There is a limit to physical availability of ports, physical export. Raw sugar production during season prices have moved up now.
Sure.
I think you should see last 20 years data and price to tell you how good the export has been.
No, sir, I agree on that. True. Sure. And so secondly, I think 2 days back, government has given approval for standalone distilleries, setting up standalone distilleries and without having any need to have a sugar crushing plant. So does this benefit us also for this new plant that we are coming up, or is it only for the new entrants?
We already have all our permissions. We are not standalone, so this is something for someone else.
Okay. Okay. So, sir, will this therefore mean that the first-time players can also now enter into the ethanol business?
Yeah, but it's going to be tough. I cannot imagine how they would, but yes, if somebody wants to, I guess he can.
Correct, because my question was basically that if first-time players enter, and there may be then a higher competition for sourcing of sugarcane. So companies to.
I don't think very relevant. Comment, yeah.
Okay. Okay. And so just lastly, to promote, sir, what was the transfer price for B heavy and C heavy for us in FY21, and what is expected for FY22?
C heavy for 3,500 rupees a ton, and B heavy 7,000 rupees a ton.
7,000 and 3,500. Okay. And sir, any guidance on tax rate, because our Q4 tax rate was very high. So what could we expect for FY22?
Last year there was a write back on account of deferred taxation provision which were created in previous years. So this being a normal year in terms of current tax charge as well as you should take guidance from this year's number for the going forward.
Okay, so around 20 to 23% should be the number we can work with.
Yes.
Fair enough, sir. Thank you so much, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Achal Lohandi from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. So my first question is, if I look at the crushing update what you have reported last month, it appears that the first quarter there will be significant drop in the crushing volume. Is it fair to assume that there could be possibility of slight early start of the crushing season in the coming season, and the fourth quarter will be peak at 100%? Yet our cane crushing for FY22 could be down by 10-12%. Would that be fair assumption, sir?
Yeah, probably.
Achal, you have picked up a very relevant point. In last year, that is, in FY2021, first quarter we crushed almost 2 crore quintal of cane. As against that, we would be crushing only 40 lakh tons of cane in first quarter of 21-22. Now, if you take the full year number of crushing, which was at 132 lakh quintal for the FY21, and with the expectation of early beginning,
yes,
I think we should be down by 7-8% from 132.
Means 950 could be the crushing against 1,032.
Yes, 950 should be a reasonable estimate at this point in time.
Okay, 950 you said, right, sir?
Yeah.
Understood. That's very helpful, sir. And with respect to the recovery rate, I understand it was impacted because of the bad weather and the disease. Is it fair to then assume that we go back to the normal recovery rate closer to 12% in the coming season on a normalized basis?
Yeah, Hamun.
Yeah. As explained by Mr. Saraogi initially also, we are working very hard on the cane development front. And if you see last year's number for the season, it was 11.89. And in spite of impact of red rot disease, we could able to close this sugar season with 11.79 recovery. So there was a loss of only 10 basis points.
0.1, yeah.
Internally, we are working with a target of around 12% for the next sugar season.
The internal target is 12 plus, but we'll tell you 12.
Great. And, just a sense on this varietal mix for us, you said we've already started the 118. So what is the mix in terms of the, early varieties, 238, 118 and the others for FY21? And how does it look for, say, FY22 or 23?
So all this data comes in the month of September when detailed variety-wise survey is done. So it's too early to say now, but we are aware of the roadmap and we will indicate it to you. The rest are, let's say, operational proprietary data, but we will keep briefing you on the macro.
Understood. And just last question, if I may, sir, with respect to export, out of the current 5.7 million ton contracted, how much is raw, how much is white? Or would you have the breakup, sir? A broad sense?
I'm sorry, that breakup is right now not available in front of me, but we'll definitely share this.
That we will get from Islam.
Yeah, that we will get.
Yes.
Got it. And sorry, I'm kind of asking one more. In terms of the sugar price, how is the current realization? What is the expectation we have? And I know it's hard to comment on the MSP, but how do we look at the sugar price or realization from here on?
So the current levels are 33.5 around, and even in the this whole pandemic, it actually had gone to 34.5, which came down to 33.5, 33.25 at times. So we are hoping that it should be north of 33.5 for the 6 months before season. It's a forward-looking answer. So upward of 33.5.
Understood. That's very helpful, sir. I'll come back in. Thank you.
Thank you.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, hi. Good afternoon, sir, and thanks for taking my question. So some of my questions have already been answered, so I'll stick to a couple maybe. My first question was regarding our cane arrears. Since our payables have come off substantially in the March end quarter, I assume that a large part of the cane arrears have already been paid. So what is your response to that in terms of the cane arrears?
From the government as power dues or subsidy our outstanding is lesser than that. So actually money will come from the government and go to the farmer.
The figure, in terms of cane arrears, so which you would like to share, or?
Yeah, it's about 6 to 7%.
Let me share the actual number. Cane price due as on date is around 180 crores, and receivable from UPPCL on account of our dues is around 80 crores, and from Government of India on account of export subsidies 150 crores.
Right. So 330 is due, 230 is due from government, and we have to pay 180.
Thanks. And my second question was relating to quotas. So essentially, we are carrying a lot of inventory into this financial year, and because last year the quotas have been high till 2Q at least, I'm assuming that the quotas will be lower till 2Q. So once we get into crushing again for FY21-22, we will be having a large opening inventory as of September. So when do we expect the quotas for us to normalize again? Since the crushing as well as the excess inventory will start playing up around the second half.
As of 31st of March 20, we were having 6.7 lakh tons of sugar. As against that, this year we are carrying 6.4 lakh tons of sugar. In the last year, first quarter, we crushed 2 crore quintal of cane. As against that, in the current quarter, we crushed only 40 lakh quintals of cane. So sugar inventory is on a downward trajectory. We don't expect a larger sugar inventory as of 30th of September 2021.
And to add to that, the quotas already getting normalized. Government released 22 for the month of June. And you will see our quotas by June end, when we report next quarter. So we already got it in our. So it's your question will be well answered once you see the next quarter's numbers, and you can be reasonably sure of what Pramod told you.
Mr. Majumdar, does that answer your question? Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. First of all, I should compliment for a very, very detailed presentation regarding the global and the domestic sugar industry. It helps a lot. So my question, 2-3 questions on ethanol front only. So when OMC gives tenders, which is say 346 crore liters, does the tender mentions a quote from B heavy, C heavy syrup, or it's the individual sugar mills when they quote in the tenders they have to mention where they would supply because the pricing is completely different here?
Yeah, obviously, Robin, you have to use a tender separately.
Okay. So when the OMC's tender, they mention they require this much of B heavy, this much of C heavy, this much from syrup, and is the industry able to meet that?
No, the reverse is true. There is a tender and there are prices. You can fill up whichever portion you want to tender. So if you want to do full juice, you have the option. You want to do full B heavy, you have the option. So there is no saying specific demand of government. It is open-ended.
Okay, it's open-ended. So it's upon the industry how much they can do in which segment, basically. Okay.
Right.
Yeah. So second question is on by 2025, everyone is talking about this 1,000 crores needed if we want to achieve 20% blending. How much is the industry readiness for the same according to you? What's in the order pipeline? How much can come? Because obviously the demand is there. It's a supply issue and capex issue and environmental issue. So supply has to catch up with the demand. So what's your take on that?
So good question. This will help me clarify the roadmap. In the last 2 years, unfortunately, there's been this corona thing. So there were times when the lifting of the OMCs for reasons beyond their control went down. So now what the government has done, it has very clearly moved forward and it is going to augment demand and augment it gradually so that, assume my capacity is coming up next year. And I have to give a much larger quantity. So they will be building up capacities for storage. They're going to start mandating, interim steps of E12, E15. I am sure, governed by those very positive steps, people will double speed up their investment. And as we indicated earlier, seeing the government's response, we are also trying to see what else can be done further. So both sides will catch up. There is grain catch up to be done. There are grain capacities on the way. Government is ready to buy grain. Government is ready to buy B, C, anything you get. So this, further impetus from the government giving sort of small improvements over the next few years will ensure that, I'll give you an example. Suppose Pramod has said 11 states did 10%. Maybe 11 states do 12% and the others also pick up. So your blending overall will go to 10%. So that means about a 25% hike, which means if we take 350 crore liters and under the 100 crore hike, it could be 450. Sacrifice would go from 2 to 3.5 million, then to 4 million, then to 5 million. This coupled with the exports, I think should normalize inventory over the next 3 years very beautifully. Over 2 years, I think inventory should really be in the range of what one feels happy with. That is another tailwind for sugar price and stability to the sector.
Sure. And the current ethanol capacity would be near 450, 460 crore liters?
425.
425.
Crores is getting added this year.
100 crores getting added this year. So it will be above 500 crores.
So over 425, you're saying 100 crores would be added in this sugar season, right? Or over 1 year?
Commissioned the model. It's under implementation. I'm not sure commissioning how fast it will happen, but yes, over 2 years definitely.
Sure. So still there is a long roadmap to reach 1,000 crore capacity, right? Because we are talking of almost doubling of capacity needed, and if I say this fiscal is also gone, so in next 3 years, 500 crore liter of capacity is a very large task, right?
So it's not so impossible. You will see people like, as we said, we have to wait for our when we are able to freeze our programs. you will be seeing that there is ability in 3-4 fronts. One, expansion of existing distilleries. Two, setting up of new distilleries. Three, existing distilleries going to fully juice and BAV, CAV will come down. Four, grain-based installations. So if you add all four, I don't rule out and call it an impossibility, though it's going to be a little tougher because Maharashtra is the lag effect. It's not impossible to reach, I won't say 1,000, but 800 and all can happen in 3 years. Pramod?
Just to clarify, out of 1,000, maybe 700 will be from sugar industry and 300 would be outside of sugar industry.
Which is grain?
Which is grain.
Yeah.
As government is giving too much of encouragement for standalone distilleries.
So government, as you see, is opening all little windows to enhance supply. And on its part, it is going to give a demand visibility stage-wise. So we stand fully committed to the program and we find the government support to be exemplary.
Great, sir. That helps a lot. And just my last question on this. I read the number somewhere. So when we are at between 400 and 500 crore ethanol production run rate, that permanently cuts down our sugar production by 6-7%, roughly around 2 million tons?
Bhavin, 2 million has been sacrificed this year. So if you 2.5 times it, it will be 5 million. If you go to closer to 20, it will be 5 million.
Closer to 25, we will be almost diverting 5 million, you're saying?
Plus, I hope, plus.
5 to 6.
5 to 6.
So which also means that India sugar production, when the weather condition was supportive, I think if I'm not mistaken, they normally peak out between 32 to 34 million. That mark will come down to 30 or below, right? If there is no new land acreage which is coming for cane crushing.
So I would put it more at 2.8 or 28, sorry. Because if I take your average of 320 and 340, which is very correct, the base case is 330, let's say. Take off 50 lakhs from it, you get to 280. And by that time, demand would be above 280. So what I'm talking about is a 3-4 year roadmap, where by the government's assistance, you would be in a program where you don't need to get into any export subsidy kind of regime. You're a self-fulfilling sort of organization, if I may say so. Only thing, government just needs to keep buying the ethanol, which they are very vehemently after. So that's the only program needed. And your inventory would normalize very fast over the next 2 years.
Sure. So, which also changes the dynamics of where the global sugar price should be then, because India is a swing factor.
And where domestic prices can also strengthen without any support from the government.
Okay.
So you're looking at, if you want my dream, you're looking at an open economy. You don't need MSP, you don't need quota, you don't need export subsidy. You need only one thing. You need a proper ethanol program, which we are seeing is not only irreversible, but we are seeing being taken up with double gusto ahead. Plus, government is looking at giving us better transport rates, faster transport abilities, faster turnaround time for our tankers. They're going into too much detail. But yes, there is government's sort of program and mindset to go all cylinders firing on this program. And the Prime Minister is directly overviewing it.
Thanks, Vivek. That helps a lot. Thank you. And best of luck.
Thank you.
Thank you. The next question is from the line of Shantanu Mantri from MK Ventures. Please go ahead.
Yeah, hello, sir. I just wanted to, get some clarity on over the previous question. So in my understanding, for 20% ethanol blending, the amount of ethanol required would be around 1,000 crore liters. And so where we are today, say this sugar season year end, we'll have around 525 crores of total ethanol production capacity, out of which around 350 crores will be available for blending, and the rest will be used up by other ancillary industries. So if we were to back calculate, if we go to around 1,000 crore liters for blending, total ethanol production capacity will be around 1,400 crore liters. So it's like almost 900 crore incremental capacity has to come in the next, by 2025. And this number has been given out by various other companies and, manufacturers of the ethanol components. So am I getting the math right here?
You are absolutely right.
Okay. So,
between 1,200 to 1,300, whatever it is.
Correct. Okay. So my next question is that this 320 KLPD of and 425 crores of capex. So, sir, if you could indicate or tell me that who are we who is our vendor, because this multi-feed with grain in the off season, there is only, in my view, one player who has the best technology. So if you can provide any input on that who would be setting this up for us?
So the orders are under finalization. Once they are given, we can get back to you.
Okay. And so my last question is, there is a Satat scheme that government, has started where, they are setting up these CBG plants, compressed biogas plants, and one of the raw material is press mud, and, successfully a couple of plants have started. So sugar industry becomes a natural, player for this. So have we put any thought on, this CBG play?
It's not a very serious business opportunity. We examined it. We will be doing it in some of our plants, but the number-wise is nothing great to report. The press mud is also very great manure for the farmer.
Okay.
If you want to keep soil health and carbon of the soil going, you need press mud to be given to the farmer. So it's not great numbers, it's not great business opportunity. In our balance sheet, it won't make a difference.
Okay. Understood, sir. That's it from my side. Thank you so much, sir.
Thank you. The next question is from the line of Madhav Marda from Fidelity Investment. Please go ahead.
Yeah, sir, good afternoon. Sir, I just wanted to ask you, you made a very interesting comment today that we're actually working with farmers to improve yields and productivity and cane acres. It's such a big change for the sector. Earlier, we would want lower production, but I think now we want higher production because that's the need of the hour. I just feel that the dynamics of the sector is so different now, right, versus earlier. Now, we actually want higher production to ensure that we can blend more ethanol.
Absolutely. So a very good question. Let me answer this very holistically. Now, assume this year we made a sacrifice of 1.7% recovery on an average for the group. If we are able to, and we hope to increase, let's say 8.75 crore crushing to 11 crore crushing, and sort of enhance our sacrifice to above 2%. So you will not be adding very substantially to inventory. You will be adding very substantially to ethanol production.
Correct.
So surplus will not result in a surplus of sugar, but a surplus of ethanol where the government is buyer for unlimited quantity. You get your economies of scale, you get your full crushing, you get good recoveries and good ethanol. So that is the program. If you read between the lines what I am saying, that is the program. Enhancing crushing, taking that enhanced crushing out of the system, maybe do 2.5% sacrifice, make huge amount of ethanol, and still ensure that you're not adding very highly to production and inventory.
Understood. And we are sort of at close to 16 crore liters of ethanol in FY21. We also have that expansion coming up in 2023 end, 22 end, sorry, yeah. So once that new, basically what as a country's ethanol production goes closer to the 1,000 crore liter mark, and we're also focusing on grain-based ethanol in due course of time. What is there like an internal target that our ethanol volume of 16 crore liters? This is what we want to get to in 5 years, given that we have the balance sheet and the cash flow to fund expansion.
Okay, we are, as I began by saying, we have very big internal study going on, and once we are able to finalize that and the board approves it, we'll come to you.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Randan from Brilliant Securities. Please go ahead.
Good set of numbers, sir. And I would like to ask you one question. See, now you are telling the ethanol is a game changer like that. You are going on expanding like that. In case the oil comes down, whether the ethanol price also will come down. So we have to balance between the two. Now you are talking about the debt of about 220 crores you are going to take from March 2002, something like the interest subvention of 50%. Can you just more detail into that? And you say that about the 600 crores will come from 2003-2024. So with the realization about 60-50 crores means about 14%, 87, 19, 4 years of payback. That's something we're telling. Is that you can confirm? Now the power also, the cost of the 3.17. Now what is the average realization 3.17? What is our cost? I would like to know that. Say now I would like to know more command area. You can go from other area. The other somebody was asking whether you can go there. Now I have got a suggestion in order to improve the command area within the command area itself. You can start another NBFC, some finance company where you can give loan to the existing farmers who have got a track record of supplying to our company, so that they can buy more land and supply. Because as a company you cannot buy more land. So keeping in future, you can have this one arrangement that will be in a better interest for the stakeholders like that. Can you? Thank you.
So, okay, just to clarify one question, I think the controversy of crude prices and linkage to ethanol has been set at rest beyond doubt. Crude went to zero last year in pandemic. Ethanol was lifted at full quantity, full price all the time. So even if crude goes to 100, we don't benefit. If crude goes to zero, we don't lose. Ethanol pricing is based on cost of production method, which we see, and MSP got raised last year, so ethanol price got raised this year. Last year, consequent to the increase in MSP. The rest of the stuff, as we said, we are working. I think we've adequately displayed ability to understand our business. We are working with the farmers. There's a lot of measures which you are saying are already under play.
That's very good. You're talking about the 1,000 crores something liter of the ethanol capacity, this one. What will be our market share towards that?
As we said, we get back with our quantities, envisaged quantities, as we are able to finalize more and more ethanol diversion program.
Okay. The current ethanol capacity after the Balrampur expansion will be around 29.5 crores liters.
Now this will be in a separate like that, a phased manner it will increase, or only when it is completed at the March 23 something like that you will go in, or phased manner like some, breakup is there?
It's not a phased manner. It's one go.
One go. 23. So it is going to come only 22. That means 2003, 2024 only you are going to get about 650 crores revenue. Absolutely correct.
Right.
Thank you very much.
The revenue figure of yours is not correct. Pramod will revert.
But 650 crores, you have stated that, no? You will come back about that will come like that. That's what you stated.
650 crores is the annual revenue potential out of the Balrampur distillery.
Correct, exactly.
Once we commence the distillery in December, for FY22-23, we will get 4 months of working.
Yeah, that's also you will be getting. That is a peak period, correct, like that? Okay?
Yes.
Yeah.
Yes.
So that will be much realization. So the payback will be, much better than 4 years only, into 3.5 years like that it goes, correct? That's what I feel.
Yeah.
Power portion, what is the cost of this power production? Cost of power.
I think average realization is 3.17 and
yes.
cost is around 2 rupees.
Oh, very good. So there's no problem. So
is there in the presentation? Is there in the presentation?
Yes. Very good. Thanks. But when you will be finally repaying, but the program is of 125 crores something.
Request you to return the question queue for your follow-up as we have people waiting for the turn.
Okay.
Thank you so much. Next question is from the line of Amish Kanani from JM Financial. Please go ahead.
Yeah. Hi, sir. I'm on the PMS side. Sir, the question is, as we have, kind of crossed ethanol PBIT at 50%, the question, sir, is we have two routes to, kind of increase the ROC of this business is much higher than sugar. And we have two routes to, kind of increase the, profitability further. One is, we sacrifice more and more by shifting from, say, C route to, say, B and A versus actually going into a new, ethanol capacity beyond sugar. So, sir, and our strength is, understanding sugar command area and, sugar farmers and the cane farmers and all. So my question, sir, is, based on a medium-term outlook, what are we comfortable with? Are we comfortable with, switching the existing capacity to more and more juice-only route? Or we are also looking at, a grain-based capacity, because there we can go, to different geography and we can have a benefit of, geographic expansion. So I understand, sir, you said that you are studying and, you will come back to, investors with the plan. But if you can give us some thoughts, that will be very useful, sir. Thanks.
I think we should, as per program, we should deal with it holistically at one go only.
Sorry, sir?
I think, please, let us wait for a bit for us to answer a question, as we said.
Okay, sir. Maybe your thoughts are also evolving, so we'll wait for that. Thank you.
Thank you.
Thank you. The next question is from the line of Rushabh Doshi from Proven Nirmiti Investment. Please go ahead.
Yeah. Hi, Vivek sir. Thanks for the opportunity. I was just looking at the EBITDA margins for the distillery segment. They are north of 40%. So for the new capex which we are doing in the distillery side, assuming a full ramp-up scenario. So in that, which is a juice to ethanol plant, would we be maintaining the same margins?
We have given an indication that project will have a payback period of less than 4 years. The EBITDA margin in that segment will be lower than what we are having today as of now. Having said that, I would also say that profitability of the sugar company should be seen on a company basis and not on just segmental basis, because segmental profitability is a function of transfer pricing of molasses as well.
Exactly.
And that differs from company to company. So it should be seen for the company as a whole. But going forward, contribution from distillery segment will go on increasing.
So is this 40% which we are earning in distillery segment, how should an investor exactly gauge that, what is the EBITDA margin a distillery is making?
So as an investor, you should see the total profitability of the company. You will see recovery movements, crushing movements positively. You will see diversions. So you will see, function of transfer pricing. Just I'm giving you a scenario where you can understand, you will get all your answers. Assuming transfer price of molasses of PAV is made from 700 to 900. Money is not gone out of the company. You will see a fall in distillery margin, but you'll see an improvement in the sugar margin. End of the year, when the balance sheet is finalized, you'll see no difference.
Right.
It will not make any difference. Money and nothing is leaving the company. It is within the two walls, either the distillery or the sugar wall.
Correct. Yeah. And my second question is you can go on.
Yeah, not to worry. Our investments and our entire program will be very well thought out.
Correct. So I just was confused, how to look at these margins which are north of 40%. That's why I asked the question. So my second question was, my assumption is that you can correct me if I'm wrong, that the ethanol blending program is only for petrol, right? Could you just enlighten us, for diesel, is there any opportunity?
My God, if diesel happens, God knows what will happen. But let's wait for this E20. Yes, there is study going on in diesel also.
Correct.
That's at a research stage, but yes, it's being actively tracked by the government. But let's keep that for future. Let's not build that in today.
Correct. Thank you, sir.
Thank you. The next question is from the line of Monish Kodke from HDFC Asset Management. Please go ahead.
Yeah, thank you for the opportunity. Sir, I have a small question. So currently, government is buying ethanol through its state-owned OMCs at a predetermined prices. Tomorrow, after BPCL privatization, would it be compulsory for the new private owner to buy it at these given rates, or government has to do some heavy lifting by shifting those purchases to other state-owned OMCs? So how would that function?
See, while we don't have BPCS documents, obviously that you people know better. Our whatever little information, and we can't be held to this, I think the ethanol program will be not allowed to go away.
Okay. Okay, sir. That's what the question. Thank you.
Thanks.
Thank you. The next question is from the line of Arun Goenka from Nippon India AMC. Please go ahead.
Yes, good afternoon, sir, and thank you for so clearly explaining in all details and for a very good presentation from Moji. Thank you. So I think most of the questions have been answered. Just a few clarifications. Once we reach 5-6 million ton of diversion in sugar, maybe around 23, 24, wouldn't sugar realization in some way find an equilibrium near to the ethanol realization? So sugar prices also move up to maybe around 38. What I'm asking is not guidance, but opinion on where will sugar also settle at, or that's the reasonable price, because inventory will be low, your ethanol would have reached a certain scale.
So, you should be delighted with that construct, and that is realism in my mind, possibility, and that's what I've been trying to explain. So, if both cylinders fire, you should be delighted. And the thought of capturing every little drop in one cylinder should be given up. Assume your sugar goes to 35 and your ethanol realization comes to 34, let's say. In 1 year, sugar goes to 34 and ethanol realization comes to 35. You should be delighted in capturing the best that a company can do with its own understanding in both the fronts.
Right.
So instead of choosing every little drop in that lemon, one should look to get best of both the world, which we will ensure that our program explains.
No, I get it. I'm just trying to understand.
That is a real possibility that sugar prices will also be very firm as we go ahead.
Right. So what I'm trying to understand, sir, the current sugar price is probably low, one, because of excess inventory that was there, that is getting resolved, partly because of maybe COVID-related demand, and right now the ethanol diversion has not yet begun. But 3 years later, when things normalize, is it fair to say that current price is on the lower side and this is not really sustainable? The equilibrium price would be much higher, which is win-win for all.
Varun, I think you yourself has answered your question. Once the inventory gets moderated, so we are talking of a situation where the sacrifice is in the region of 5 to 6 million tons. Sugar production in the country equates to the sugar demand, and there is no baggage of extra inventory into the system. I think Mr. Saraogi also said earlier that we are not looking for any MSP regime, any quota regime, any export regime.
Yeah.
And domestic prices will find its own way.
Sure. Absolutely clear. Secondly, what would be our working capital maybe 3 years down the line, because we will be substantially, our distillate capacity is substantially increasing, and maybe the full benefit of that will be available FY24. So just pro forma or just to have a basic understanding, we are going from asset heavy to asset light. So what will be our working capital requirements then?
So few years back, we used to have a peak working capital utilization of almost 1,500 to 1,600 crores. This year, as of 31st of March 2021, we had working capital utilization of 891 crores. So we are already into downward trajectory. Having said that, though our endeavor would be to reduce a bit also on the short-term borrowing front, in addition to the long-term loan repayments, but our cost of capital for working capital is less than 4%.
Right.
So if there is any growth opportunity, definitely we will evaluate that before taking a plunge into reducing the working capital significantly.
Sure, but our sugar carrying inventory, what would be our guesstimate, sir? Where will that drop to? I mean, we used to carry sugar inventory for 8-9 months. So will it drop to close to 3 months, or what would be our?
Our endeavor would be to have sugar inventory as of 30th September in the region of 2.5 months to 3 months.
Right, so great. Sure. I think the rest of the things are absolutely clearly answered. Thank you so much.
Thank you.
Thank you. The next question is from the line of Kush Gankar from Care PMS. Please go ahead.
My question was similar to the earlier participant. With this new expansion in Mirzapur, what so will we be able to sell all our excess sugar, or in spite of that, there will be still some excess sugar inventory which we will have to carry? And if yes, you can quantify the quantum 1 month to 1.5 month inventory.
It is not possible to go to such great details. It is a question of government's quota per year, your production, your diversion, how government releases, exports, how much you do, what is the figure of exports. We give me a broad construct. We cannot go into, because this is beyond our control. You got a broad construct of how much ethanol will be made. That is working capital light. You will still continue to make sugar. So we've given a broad construct.
Sure. So after, so you said 30th September, 2.5 to 3 months inventory you will be carrying for this year.
Yes.
For this year, but after this new. Sure. So after this new distillery expansion, that would even fall further, right?
Maybe a little bit, maybe not. You see, these are things which can't be answered like this.
Okay.
But broad construct you must get, that's all.
Sure. Okay. Great.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Over to you.
It has been a pleasure being with all of you today, and I hope we have been able to answer all your questions. If you have any further questions, we will be happy to be of assistance. We hope to have your valuable support on continuous basis as we move ahead. On behalf of the management, I once again thank you all for taking out the time to join us on this call. Thank you so much.
Thank you, everyone.
Thank you. On behalf of Balrampur Chini Mills, that concludes this conference. Thank you all for joining. You may now disconnect your lines.